Good morning, dear students. We have started our third module of direct tax, that was income from business and profession. So, in this module, we have studied about some basic parts about income from business and profession. Today, we will see about some important notes, formats, and some other details related to income from business and profession. There are following things, incomes, which are taxable under this head. All incomes are not taxable. The incomes which are said as per section 28 of Indian Income Tax Act of 1961, those kind of incomes are taxable under income from business and profession. So what are those? Profits and gains from business or a profession, income from speculative transactions, compensation for termination or modification of management agency, income of trade professional or similar association, export incentives, perquisite from business or a profession, interest on capital or interest on loan, salary or other remuneration received by a partner from its firm or limited liability partnership, compensation received or receivable in cash or a kind, compensation received under or key man insurance policy, sale of assets specified under section 35D. So these are few categories of income or types of income which are charged under the head income or income from business or a profession. Now, when we know about the different income, there are some other kind of income which are not taxable under the head profits and gains of a business and a profession. So, which are those? Those are dividend when shares are held as stock in the trade. Right? If you are having a stock in the trade, and for that if you are getting any dividend, so that is not taxable under profits and gains of a business and profession. Similarly, income from business of letting out house property. If you get any income from house property, it should not be taxable under income from business. Then exempted income. There are some income in India, those are exempted, like agricultural income, like dividend from Indian company, share of a partnership of a firm, a partner of a firm. Then similarly, there are so many other income. So if you consider those income here, those are already exempt, and those are not taxable according to Indian tax system. Similarly, gain or a loss on sale of a business asset. If you get a gain, profit, or if you get any loss on sale of business asset, those should not be treated as the business income or a business loss. The reason is those are treated in a different head called as capital gains. Similarly, casual income. Any income which you don't get in the regular course of the business, like if you win a lottery, if you win a crossword puzzles, etc., by that if you are getting any income, so those are taxable in some other sources. Those are not taxable under income from business and professions. Then there are certain income which are totally and allowed, right? These are allowed as per income tax, which are said as per section 30, under section 30 to 37. These are allowable expenditures. So what are those? Rent rates, insurance and taxes of a building, rent, repairs, insurance of plant, machinery, furniture, depreciation, expenditure on scientific research, expenditure incurred to obtain the license to operate telecommunication services, expenditure eligible project or a scheme, contribution for rural development, deduction for capital expenditure to specified business, expenditure on agricultural extension, amortization of preliminary expenses, then expenditure incurred on amalgamation or demerger of Indian company, voluntary retirement compensation, expenditure on prospecting, other deductions, general deductions. So these are those things which we can call as the deductions, which are those expenditure which are allowable. Right? These are those expenditure which are allowable. Now let us see, there are those expenses which are disallowed, and these are said 40 of Indian income tax. So these are interest on capital, provision for doubtful debts, wealth tax, income tax, excess depreciation, donation and charities, capital expenditure, personal expenses, capital loss, provision for sales tax, right? Provision for gratuity, Then similarly cash payment exceeding rupees 20,000. So these are totally disallowed. So how to calculate a income from business? To calculate income from business, first of all, we will start with the profit. Right? Debit side of profit and loss account, we will write that particular thing. Mark of the identity, the disallowed expenses afterwards, such as expenses are to be added to net profit. Credit side, what you should write? Identify the income exempted and taxable under the separate heads. Then additional information, if he has given, identify the business expenses or income, such items are to be adjusted. Okay, this is a general information he has given to calculate the income from business. So let us see in the format income from business. So we need to prepare 3 columns: income from business, inner column and outer column. So the first head we have written as income from business, net profit as per P&L account. Okay, net profit as per P&L account. If he is giving you net profit, well and good. If he is giving you net loss, you have to write in the minus. Add purchases related to the next year. So we will add undervaluation of closing stock, we will add overvaluation of opening stock, we will add again. Then less undervaluation of opening stock, we will deduct, less overvaluation of opening stock. So after this, whatever total we get after doing this all adjustment, we should write in the outer column. Similarly, next is add disallowed expenses. So in the previous slides, we have seen about the disallowed expenses. So if you are getting any disallowed expenses in the problem, so those all disallowed expenses should be added here. We should add it back because those are either wrongly disallowed or those are should not be allowed, but it has been disallowed. So those are interest on capital, capital expenditure, provision for sales tax, donation and charities, capital loss, provision for doubtful debts, income tax, wealth tax, personal expenses such as LIP, life insurance premium, drawings, household expenses, excess depreciation, provision for gratuity. So these all expenses are disallowed and much more are there. You need to add it back again. After adding this, we will write less income exempted or taxable under separate heads. Under that, number A, exempted income. Like as I have told you, agricultural income, gift, income tax refund, bad debt recovery disallowed, dividend from Indian company, interest on post office savings bank account, then amount received from LIC on maturity. So these are all income which are exempted, but you have taken a business. Now you should make the total of it and then you have to reduce the total amount. Similarly, income taxable under separate heads like capital gains, rent from house property, adjournment from cooperative societies, interest on bank deposits, interest on other securities. So this all things also will remove, right? So in this total income, the final total, we will remove this separate income, exempted income and income taxable under separate heads. So the final amount we will get, and under that less expenses allowable but not debited to P&L account. These are allowable but these are not debited, maybe by mistake, maybe by some other reason these are been forgotten. Now you have to reduce this, like depreciation, bad debts. After doing this, you will get income from business.